Hey team, Mauricio back again on another session. This session is going to be strictly going over a golden pocket ratio and being able to identify when to use your golden pocket ratio so that way you can benefit of a good long position or a good short position, so that way it can be a swing trade or an intraday trade where you're going to have a better risk to reward. When it comes to risk to reward, you're going to be looking at 3 to 1s, 4 to 1s, 5 to 1s, and so on. Anything above a 3 to 1, which is going to be really good, meaning that you can lose 2 trades, gain 1, and you still come out profitable. And that is what we want right here when it comes to being able to grasp this information from a golden pocket ratio. Now, down below on the first link below, you'll be able to see Pace Profit Club, which is where we go ahead and give out 2 pre-recorded sessions a week, and then we do 4 live sessions when it comes to 4 live English sessions and 4 live Spanish sessions for every single person that is on there is going to be able to grasp this information. So that, with that said, let's go ahead and jump into USD CAD. USD CAD right here, we can clearly see that we see a point of liquidity. Okay, now you are going to be hearing some terms in this session, which is going to be based off an institutional standpoint. Institutional standpoint, what I take in consideration is be distribution phases and accumulation phases. This is known as the Wyckoff system. Okay, so going into that, I'm not going to go too depth with it. If you do want me to go in depth with Wyckoff, just go ahead and comment down below what it is that you'd like me to go over on the next session, and with all due, I will as fast as possible. Okay, so right here we see liquidity. Okay, liquidity is provided when we see a lot of rejection in the market in one certain area. Okay, now this certain area is creating a resistance level. Okay, this resistance level is creating liquidity, which is creating pressure for either buyers or sellers in the market. And when that is created, there's money. Okay, there's money created on this side, meaning that if there's money on that side, we are more than likely going to go through that liquidity because the banks want to go ahead and grab that money. Now right here we had created a upthrust. Now the upthrust is known when we take out that liquidity point at very high levels of the market. And then over here we see a upthrust after distribution, where we can clearly see that everything has happened, and then we have one more pull to the upside. So once this happens, okay, you're more than likely going to see a push of momentum. Now, it doesn't always have to be in this order, but you will be able to see push momentums with this information I'm going to go ahead and drop down below that I'm going to go ahead and tell you guys right now. So, as you can see, market has gone ahead and ran through this previous low. And not just that, but it had ran through another low. Now, when it runs through the first low, that is a break of structure. When it runs through the second low, I consider this as a break of direction. When I see a break of direction traded in the market, I tend to look for my Fibonacci retracement on our golden pocket ratio. So I'm going to go ahead and trace from the top of the market to the bottom of the market. And our golden pocket ratio levels are be 61.8, 71%, and the 78.5. Now understand that the 78.5, there should not be any closures of candles. There should only be wicks in that area, so you should only see rejection. If you see any closure of candle on the 78.5, do not take the trade, because more than likely you're going to retrace more to at least 100 or continue going towards this direction to the upside. Now, with that said, when we do see that distribution and then we see that push of momentum, more than likely you're going to go ahead and see some accumulation on the downside, okay, which is on this part down below. I'm going to go ahead and take that little shade out so that way you can go ahead and focus on what's happening right here and what can happen in the near future. So what the market had created movement to the downside, creating some type of seller's climax. Okay, we had automatic reaction, secondary test, and then we have the market creating what? Getting a spring. Okay, when it created the spring, it took out liquidity. It took out all these lows over here because there was money down there. Now understand that we had a good reaction to the upside, which it broke our one thing. What did it break? It broke our structure. 2, it broke direction. Okay, so now we are moving to the upside. Okay, when we are moving to the upside, we got to take in consideration where can we buy. Okay, where did the momentum start? It started from this candle. Okay, so we are more than likely gonna see some type of retracement in the market coming down over here before we go up over here within these levels, 61.8 or 71%. Now, if we do this, what would happen? This would go ahead and create my whole accumulation schematic. Okay, it would create my whole accumulation schematic, so that way it can go ahead and push further up. Okay, now my main trade, the one that I want to go ahead and jump in and I'm more concerned about, is going to be not the accumulation schematic to the upside, but the golden pocket ratio to the potential downside, which is going to be down over here. Let me go ahead and show you guys real quick. So once I do see market coming down over here, respecting and then retracing, I'm gonna look for any type of candles that can go ahead and tell me what can possibly happen. In this case, I'm finding a lot of liquidity in this region. With that said, I found liquidity in that region. I'm gonna go ahead and trace a risk reward ratio right here. Psychological levels 1.329. That'll be our potential entry. And then stop loss can be anywhere above the 78.5. I'm just gonna go ahead and put it over here, right above this level right here, this high. It can be 25 pips, it can be 30 pips. Whatever you feel more comfortable with. And our take profit can go ahead and go down to that negative 27 level, which this will leave us at a 3.5 to 1 risk reward. Almost a 4 to 1 risk reward. That is if you continue on to 6 to 1.8, then it will possibly be a 5 to 1 risk reward. For now, I'm going to go ahead and leave it at a 3 to 1 risk reward. This is a live trade, so that way you guys can go ahead and feel free to do so by taking this trade. Now, taking into consideration that if you do take this trade, take proper risk management. I'm by no ways telling you guys what is going to happen in the market. This is just my outlook when it comes to USD CAD and what is that I am predicting in the market that can potentially happen. Okay, so with that said, I'm looking for some type of accumulation, come back up to that golden pocket ratio, reject out that golden pocket ratio, and then tumble down. Okay, we'll go ahead and come back with a review once we go ahead and see this trade come into fruition and go from there. Now, with that said, if you guys want me to go over some other type of specific lesson, let me know down in the comments below. Like always, comment, subscribe, and I'll see you guys in the next session. Thank you for joining on this one, and I'll see you guys on